No, I'm just kidding. We got Scott Bauer coming. I had to squeeze one in there. CEO of Prosper Trading Academy. Hey, Scott, you a Peakies fan?
Let me get my mask on first to be someone else. But actually, no, I am not a Peaky fan.
Oh, you got to get into it, Scott.
I'm a South Park fan, and
All right, there you go.
A couple episodes that are right up there.
All right, well, as a Colorado homeowner now, you got to be on the South Park train. Okay, what do you think about Netflix here?
You know, I'm not so concerned about the call out of Goldman Sachs. I mean, you know, many of the things they say are valid. It's a fairly downgrade, but you know what? As you guys just discussed, this stock is now coming down to a level, not just the dollar price, but PE ratio that, man, if there's ever a time, I think, to buy a stock like this, it's got to be now. I mean, obviously the stock can go lower, but 18 PE, come on. I'm not listening to Goldman Sachs. I think this is a really good opportunity.
Wow.
So from the option side of things, though, obviously with this kind of move, implied volatility has gotten pretty rich. Options are very expensive. So rather than buying the stock or rather than buying calls to the upside, I'm selling a put spread, Oliver, because I don't mind if the stock goes down a little more and I get assigned on the stock. I want to own the stock. So I'm selling the July expiration 175, 170 put spread for like $2. Okay, my break even on that is 173. I don't mind buying the stock at 173, quite frankly. Now, if I let the put spread go and the stock just continues to go down, I get stopped out and I can lose $3 on this spread. Otherwise, I keep the $2 or I can choose to get assigned. Again, I'm doing this because option premiums are rich and I don't mind buying the stock at 173, regardless of what Goldman Sachs says.
Okay, I like it. You're stepping into the fire here, Scott, but wearing a little bit of protection too, because when you've got
absolutely,
you're not going straight into the flames here, selling the downside instead of buying the upside, trying to use the vol, because it's a pretty tough trade. A lot of these, Netflix is a good example, where even if you want to get short, you're either going to have to pay through the nose or get just a massive move. And ultimately, to the credit of the hopeful case here, is that Netflix hasn't made a new low since early May, so it's been about a month.
Yeah, which is not a long time, and maybe it will make a new low, but it's hovering kind of right around there. But again, I love this trade because I'm completely risk defined. If I'm wrong, okay, I accept the loss. I know what my loss is going ahead of time. But I'm doing this because I am willing to step in if the stock were to come down another $10 or so and buy the stock at that level at 173. So rather than doing that, I'm just going to sell. My world is trading options. I'm just going to sell some really rich option premium, and we'll see what happens.
Okay. All right. Thanks, Scott. Appreciate the trade. Mr. Bauer, CEO, Prosper Trading Academy.